AMCU is back in the headlines. The South African Association of Mine Workers and Construction Union is demanding that entry-level wages in the gold sector need to be more than doubled. This is just the latest step in what is shaping up to be a very, very tense season of wage negotiations right across South Africa's mining sector and its public sector as well. Welcome to this edition of Global Business Africa. We'll be exploring these issues and plenty more in the next half hour. Here's what's coming up. Petrol scarcity is getting worse in Nigeria despite a deal between the government and oil marketers. And how's this for green antibiotics? Morocco is developing an animal feed that harnesses antibacterial properties of essential oils. Let's divert our attention briefly away from business matters. Our top story comes from Burundi. It's been a very dramatic day for one of Africa's smallest nations. President Pierre Nkurunziza is scheduled to fly into the country tonight, but it's not clear if he will be allowed to land in the country. He has been in Tanzania to talk about the political crisis in that country, but while he was away, an army general claimed to have executed a coup. Major General Godefroy Niyombare said that the military has effectively fired the president. He now says it's closed the country's borders and shut down the airport as well. Now, the presidency, however, was quick to rubbish that claim, calling it a joke. That said, crowds of people took to the streets of the capital, Bujumbura, cheering and singing in support of the general. Now then, let's move on to what looks like the makings of strike season in South Africa, where the Association of Mine Workers and Construction Union wants the basic pay for entry-level workers in the gold mining sector doubled. AMCU President Joseph Madunjwa said the union would be seeking a monthly wage of over $1,000 for workers who currently earn around half as much. Between dwindling profits and increasing costs, however, Africa's top gold producers, AngloGold Ashanti, Sibanye Gold and Harmony Gold, they all say that pay hikes and strikes would be disastrous.
We are not worried about what the CEO are commenting, as much as they are not worried when they pay their workers the slave salary while they are earning these millions. I think the mine workers are enslaved across the country, across the mining sector. So whatever we put forward is to liberate the mine workers in this economic oppression. Chamber of Mine is not a bargaining council, and that has been confirmed by Goldfields, who concluded their wage agreement outside Chamber of Mine. We've been singing the same song from last year, but no one wanted to sing in the same hymn book that we were singing.
Now, Zimbabwe's state-owned power utilities mulling over the sale of $1 billion worth of debt, which is owed to it by defaulting customers. The troubled Zimbabwe Power Company wants to sell off the debt at a discount to potential creditors in order to raise working capital, as Farai Makutuya now reports.
Zimbabwe's power utility is failing to meet demand and is working on a number of projects to expand existing power generation capacity. They are being financed through borrowed funds, but the company also needs working capital, which is currently locked up in a debtor's book that has ballooned to over $1 billion. Swapping this for less cash now is one option on the table, but there are doubts that there will be any takers under the existing economic conditions.
The reason people are unable to pay to ZESA is because the economy is not performing and people do not have money. And when they sell off the debt to somebody else at a discounted rate, I don't know how that person is going to be able to recover the money, because it's going still to go to the same customers that defaulted when on paying ZESA, and they're going to default on paying the same person.
If the financial re-engineering plan comes off, ZPC needs to ensure that it does not dig itself into a deep hole again. It's currently rolling out prepaid and smart meters to both domestic and commercial users to manage power consumption going forward.
That's also going to take a long time to implement, but if they take a long-term view, I think there would be financiers who are prepared to support them, because they are going to be getting their cash upfront, which will also help the power utility company in the management of its own cash.
Zimbabwe's current power supply is 1,082 megawatts against demand of 2,200. The shortfall has resulted in regular power outages that have adversely affected industry and have been blamed for scuttling economic recovery. Farai Makutuya, CCTV, Harare, Zimbabwe.
Now then, let's do one of these interesting little chart data-driven numbers that we like dealing with on this program. Barely a week ago, on the 6th of May actually, Bloomberg reported that Western Union had been in talks to acquire its smaller rival, MoneyGram. Now, on the 6th of May, after MoneyGram shares had shot up by as much as 41%, Western Union representatives came out and said, no, actually those reports are not accurate, we're not in talks, we're not interested in buying out MoneyGram. Nonetheless, there's a fairly good reason to explore the merit, or in this case, the lack thereof, of such a deal. You see, in the last quarter of 2014, the global average cost of sending about $200 anywhere in the world was about 80%. But if you're sending money to this continent over here, it was actually way higher. That was about 12%. Now, keep in mind, however, that it actually does get a lot worse if you're within Africa. A 2014 study by ODI pointed out that if, say, you're a Ghanaian living in Nigeria or a Mozambican living in South Africa and you want to send money back home, the transaction cost would rise to at least 20%. It's a staggering number. Now, that exact same study also pointed out something equally disturbing. Between them, these two companies, Western Union and MoneyGram, control up to 67% of remittance flows to Africa. Now remember, we're talking about roughly 30 or so billion dollars a year since 2012, and that figure keeps rising. Now, it's market concentration on that scale, which ODI argued last year, that allows these two companies to rake in over $586 million through what essentially are described as opaque foreign currency charges. Now, as dismal, as disturbing as these numbers do look, there is one slice of good news for you if you're sending money back home, and it lies in two concurrent developments: the rise of mobile money use across Africa and increasingly higher mobile penetration rates right across the continent. As Ismail Ahmed, the CEO of World Remit, told me earlier on, these two developments are enabling more and more African migrants to sidestep these two companies altogether.
There is an audit trail. Starting when a customer goes to our website or downloads our app. So, and the money is often coming from a bank account, whether it's a card or bank transfer. Compared to the traditional model where someone takes cash, goes to a corner shop, and you don't know where the money came from. And even, somebody going to a corner shop could be using even a fake document to show to an agent. And often in that context, the agent is not a staff member of the principal or the company. It is somebody who's doing this as a side business. Mm-hmm. So historically, there has been a lot of challenges in terms of terrorism financing, money laundering within the cash-based model. But in the online setting, yes, the money is already coming from an account where the bank must have done a KYC. And on top of that, it's easy to do electronic verification in a lot of the send marketers. So you're dealing with somebody who is opening an account, becoming a regular customer. You understand their profile. You do transaction monitoring. And then in the receive side also, where we have done more than any other company in terms of digitizing the receive side. When the money goes to a mobile wallet, there is then again an audit trail which shows how the recipient is using the money.
Picking up on that point, though, the World Bank, in a report issued out in April, indicated that the use of mobile money in cross-border remittances, especially within Africa, is still fairly limited. I mean, the value of international remittances going through mobile phones accounted for less than 2% of global remittances in 2013. What is the problem here? Why are more companies and more people not sending money through mobile phones and essentially avoiding the whole anti-money laundering, terror financing risks that entail with that come along with cash pickups?
Things have changed dramatically in the last year and a half. We see a big chunk of international remittances, particularly to Africa, going through mobile wallets. And Kenya, Kenya was one of our first corridors. And today, close to 90% of our transactions are going to M-Pesa. A lot of the banks that work with money transfer businesses like to see digital transactions in the receive side as well. So with that shift is starting now, and we see that shift accelerating.
Could mobile money then, in that sense, be perhaps the silver bullet, as it were, to solving the problem of sending remittances from, say, the UK and the US to Somalia?
In Somaliland, that is what is currently actually happening. So there is a mobile money service called ZAD, which the GSMA says is one of the most successful mobile wallets in the world. Because in that wallet, customers don't cash out. They use the money to pay for goods and services. So in the capital, Hargeisa, today, anybody taking a bus would be able to pay the fare or through the mobile wallet. And so hugely successful. So international now remittances are increasingly going to that wallet now, which is connected to MasterCard's HomeSend platform based in Belgium. Mm-hmm. So a lot of companies like us are connected to that hub. And so we think, in many countries of Africa, in many countries, the mobile wallets could become the solution and could address some of the concerns about the audit trail. Where is the money going to?
That's part of my conversation earlier with Ismail Ahmed, the CEO of London-based World Remit. Let's get back to one of our earlier stories. Of course, AMCU has made its demands, at least for entry-level wages, fairly clear. They want to double those to at least 12,500 Rand per month. That's just over $1,000. Pretty much the same argument they made when it came to negotiations with platinum sector companies a couple of years ago. Now, let's head over to Johannesburg, South Africa. Angelo Coppola has been following this story for us. He's live over there right now. Angelo, between 2013 and 2012, year on year, the number of employees in the gold sector went down by about 7.5%, but total spending by mining companies on salaries went up by a comparable amount. What explains this trend?
Well, Roman, if you believe AMCU and the other unions, it's all about the huge salaries and increases that the executives gave themselves. On the other hand, it's also about the cost-cutting and retrenchment that happened at the lower end of the staff sort of pyramid, if you want. And then when oil prices drop, obviously this leads to margin squeeze, which is an issue. In the past couple of years, though, the last gold sector salary negotiations also included inflation increases, and that played a role. But let's not forget that those increases applied in the multi-year agreement as well. So there were year-on-year increases in line with inflation. So while labor costs were labor numbers were coming down, the costs of keeping those people employed was actually going up. Rama?
Indeed, per capita costs are certainly quite the problem. Speaking of another per capita unit, let's talk about operating cost per metric ton, especially for gold mining firms. Operating profits per metric ton. This was down 18% year on year in 2013. Now, between the decline in output, the rise in core costs like labor, isn't this just the start of a long-term trend?
Well, the issue in South Africa, as you know, Raman, is that the ore bodies are complex, and the deeper the shafts go, the more expensive it gets to pull the rock or the ore up to the surface. And there are no new ore bodies on the horizon anywhere. So you're going to have to rely on new techniques to try and get the rock out of the ground. Labor, of course, is not going to get any cheaper, and we know that mechanized mining can't work on every single gold mining shaft. So this could well be a trend, unless, of course, the gold price goes through the ceiling. Raman?
Indeed, we'll have to see what happens on the futures in the spot market for that commodity. We'll leave it there for the time being. That's Angelo Coppola live in South Africa. He'll be keeping tabs, of course, on developments over there. Quick run through the markets here for you. Dear fairly mixed numbers across the board. Nigeria and South Africa both firmly on the rebound, up by between a quarter and just about half a percentage point. EGX 30, however, and Nairobi very, very firmly in the grip of the bears, down by 0.65% in East Africa and 1.71% up north. We'll be in Ghana next. The central bank there has raised its main policy rate with an eye on inflation. And we'll also be in Nigeria. This petrol scarcity just doesn't seem to go away. We'll tell you why next. Africa is on the move. It's home to 7 of the world's 10 fastest growing economies. We help you make sense of the fast-changing African business landscape. We take you where the business is happening. Global business
weekdays at this time on CCTV Africa.
Right, then welcome back to the program. You're watching Global Business Africa. Now, of course, today has been a fairly eventful day for Burundi, whereas there was supposed to be a summit of East African heads of state in Dar es Salaam in Tanzania. When the Burundian president is over there, one army officer essentially announced a coup. Let's head over to Kofa Mrenje now. He's live in the Burundian capital of Bujumbura with more details on what's going on over there. Kofa, as far as you know, has the plane carrying Pierre Nkurunziza managed to land in Bujumbura, or has it been diverted elsewhere?
Well, Rama, as it is at this moment, the information we are getting is that the plane carrying the president has not arrived. So it means he has not arrived here. There had been indications earlier this evening that he will be coming back at the airport. You know, indications were that he would be coming back. However, about 2.5 hours ago, the general who announced that coup had made a statement saying that the airport has been closed and all borders also have been closed. And the information we are getting is that that airplane was not allowed to land at the airport here in Bujumbura. And reports indicate that the president might have gone back to Dar es Salaam in Tanzania.
Indeed. Give us a sense, though, of exactly how much control the army has over the country and the arms of government. And also, is the army unified in this decision to execute a coup, or is it just a splinter group that decided to say, you know what, let's kick Pierre Nkurunziza out of power?
Well, immediately after that announcement was made, police officers who have been largely trying to control the crowds here cleared from the streets, and you could see the army on the streets and manning major establishments in the capital. That was an indication that the army at that point was indeed in control of the situation here. However, we are also getting reports that there are some officers who are still loyal to the president. In fact, for example, the national broadcaster here is believed to still be under the control of soldiers who are in control, who are in support of the president, and that's why he has not been able to make a statement on the national broadcaster, but he has been making statements from private radio stations.
Indeed. One final question for you, Kofa, before we let you go. What more do we actually know about this coup leader, Major General Godefroy Nyombare? What do we know about him? What's his background?
Well, he's said to be a former ally of the president. In fact, we understand that he served as a rebel commander in the ruling party. We also understand that he played a key role in sending troops into Somalia to be part of the African Union force there. We also understand that he served as an ambassador to Burundi in Kenya. However, he was fired about 3 months after he was appointed the intelligence chief here, and largely it is believed that he was fired just a few days after he expressed his dissatisfaction with the president's move to run for another term in office.
Indeed. We'll leave it there for the time being. That's Kofa Mrenje live in Bujumbura. Do stay safe. We'll catch up with you a little later on in the course of the day. We'll, of course, certainly keep you updated on developments in Burundi as and when they do happen. For now, though, let's head over to Ghana. Some monetary policy news now. The Bank of Ghana has unexpectedly raised its main policy rate by 100 basis points to 22%. It's an eye-watering number. The idea here is to offset the risk of future inflation. Governor Henry Kofi Wampa has raised rates gradually over 2 years in a bid to curb inflation while maintaining growth, as the macroeconomic position has deteriorated in a country that saw years of high growth through exports of gold, oil and cocoa. Analysts had predicted the policy rate would be held at 21%. Reforms outlined in a $918 million IMF aid deal agreed to in April may also ease pressure on the local currency and consumer prices as well. Now, the fund had agreed to lend Ghana money in a 3-year program, which included curbing public wages and reducing the budget deficit. West Africa's second biggest economy is battling power blackouts, a sharply devaluated currency, and much slower economic growth. Let's see if Paul Volcker will approve of that. Elsewhere in Nigeria, the petrol shortage over there is getting worse, despite the government having arrived at an agreement with major oil marketers over the payment of outstanding fuel subsidy claims. Long queues at filling stations are still present, and more petrol stations are running out of fuel to sell. Deji Badmus has the latest update on that situation.
This is the clearest evidence of the magnitude of the petrol crisis currently rocking Nigeria. Long queues of tankers waiting to be loaded with fuel at the country's major depots at the Apapa area of Lagos. The queues stretch over 7 kilometers, with the tankers completely taking over an entire lane of the major road leading to Nigeria's major seaport.
What can we say? It's been terrible. Let me just use the word. I mean, you have a car, you can't even drive the car. This has been going on for almost 3 weeks, almost a month. And then you spend 4 or 5 hours just trying to, come out of the estate into the main street, and you can't even go out. So most of the time, I just park my car and I take the public transport.
Some of the tankers had spent weeks waiting for their supply, but only few of the marketers are actually pumping petrol, as most of them have suspended importation, holding out for payment of their subsidy claims by the government.
Most of these tankers are not Lagos-based tankers. They come from the north, east, south, and even southwest. They come purposely. There's no fuel in the area, and they must come to Lagos to pick fuel. So Nigeria will continue to experience this queue until we are able to stabilize the supply. Because we are short of supply as a result of subsidy claim from the federal government by the major and independent marketers. And some of them closed shop. They did not load any truck as far for the past 2 weeks.
With the tankers finding it difficult to load fuel, petrol stations are running out of supply, with prices going up beyond the regulated price of 87 naira per litre. The marketers say they are still being owed about 200 billion naira in unpaid subsidy claims, a figure initially disputed by the government. But last week, both sides reached an agreement on the issue, with the government promising to pay.
If not because of the claims and counter-claims by the marketers and the government, I think we shouldn't have experienced it. Now that they are trying to resolve it amicably among themselves, Nigeria should be at rest. If the rate we loaded yesterday can still be maintained till the end of this weekend, by next week, we should be bold enough to say bye-bye to scarcity.
But even if Lagos kissed goodbye to scarcity in the coming days, it surely would be weeks before other parts of the country can hope to enjoy regular petrol supply. Deji Badmus, CCTV, Lagos, Nigeria.
Let's make a quick run through commodity prices. Oil, of course, still bouncing up and down, still essentially behaving like an absolute yo-yo. 67.39 is the number on Brent crude that we're interested in today. Also an update from South Africa. This, of course, is in relation to the union mine talks over there. AMCU says it's in talks with Lonmin over plans over there to cut about 3,500 jobs. Next, we'll be showing you how to take organic food to the next level. Morocco is developing an animal feed that harnesses the antibacterial properties of essential oils.
Africa is not one country.
And Africa is not one story.
But as Africans, we do share one belief.
What more offensive in a
that whatever the challenge, we will overcome.
CCTV Africa brings you unrivaled coverage.
From the fight against Ebola to the fight for greater freedom.
From the figures seeking your vote to the figures shaping your economy.
This is Guy Henderson reporting from the jungles of East.
And all the reasons to celebrate the diversity on this great continent.
Welcome back to the program. Let's introduce you to a Moroccan scientist, Adnan Ramal. He's developed a patented alternative to livestock antibiotics. Now, this new product is basically a composition of natural molecules with antimicrobial properties. And it essentially cuts the health hazard to cattle and also at the same time prevents the transmission of multi-resistant germs to humans. Makugu has more.
Scientists here at this research laboratory in Morocco have developed an animal feed which harnesses the antibacterial properties of essential oils found in herbs.
We are using a patented process that allows us to interlace the active molecules inside the clay plates, and through this, they are stabilized during storage and transportation, and the essential oils will only be released once the product arrives in the animal's guts.
The new product is able to replace antibiotic growth promoters used by farmers to speed up weight gain in broiler chicken. This is good news as the worldwide campaign to reduce the use of antibiotics, which can create multi-resistant bacteria, takes shape.
Why continue to use antibiotics which can provoke a massive problem for human health on an international scale?
The feed named Natural Promoter 600 also works as an antifungal and antiparasitical agent. The team is confident that the three benefits combined in one affordable animal feed means the product is set for success. Natural Promoter 1600 has already been nominated for this year's Innovation Prize for Africa, which aims to promote the spirit of innovation across the continent.
The most important thing, in my opinion, is that the young people, students in general, in all the countries, feel a complete braveness. And if we respect these new antibiotic rules, we could really innovate, whether we are in Morocco or any other country in the world, rich or poor. If we respect the antibiotic rules, we could possibly make innovations. And in addition, we will then have new innovations and new results.
The production is better and the product is very clean. There's no bloating afterwards. After the chicken eats it, there is a very good reception of the product.
When the product was in trial phase, it was given away free to farmers. But now Natural Promoter 600 is on sale. Around 200,000 worth of feed has been sold so far this year. Makugu, CCTV.
And agriculture essentially leads us on into a question of currencies. The Kenyan shilling remarkably well behaved in trading today, 96.30. None of those insane drops off the cliff that we've been seeing since Monday, all the way from 95 to 96, 96.80 in some instances in trading today. We'll keep tabs on this, however, and let you know how it progresses in the future. But that's it for this edition of the program. As always, we like hearing your feedback, your thoughts, your ideas on what you see on this program. Global Business Africa at cctv.com is the email address to use. And of course, as always, the news continues on Facebook and on Twitter. We'll see you in 23 hours. I'm Ramanya.